Hello everyone. I hope you are well today. How are things? Put my seat up a tiny bit, I think, as well. There we go. That's a little bit better. How are you this morning? Everyone, let me know if you can hear and see me all right, if everything is working at your end. Give me a hashtag replay as well if you are watching the replay, and do make sure you give me a hello. If you are tuning in live today, I would love to say hello back to you. So do let me know that you are here. Let me know that you are tuning in. I would love to know that you are here. I hope we have some people hopping on at the moment. This is AMs with Annette, and of course, it being Tuesday, that means it is the UK business update session that I am running this morning, which is what we run every single Tuesday at 11 a.m. on whichever platform you are happening to be watching on. We are currently, of course, live on TikTok, Instagram, YouTube, Facebook, Twitter, Periscope, and of course inside the Uncover Wealth community, my private community on Facebook as well. So thank you everyone who is watching, whichever platform you are on. Good morning, Thomas. Good morning, Unicorn Party Glitter. Good morning, NKC. Good morning, Cozy Sundays. Good morning, everyone who is tuning in and saying hello to me as well. So thank you for tuning in. Thank you for joining me. I highly appreciate it. So today, like I said, is our UK business update. AMs with Annette on Tuesdays. We always running through things in relation to UK business, whether that be the government support available at the present time, whether that be things to do with Brexit, the economy, employment, all those things. That is what we are speaking about this morning. For those of you that are new to me and have not tuned into one of my lives before, welcome. First of all, and my name is Annette Ferguson. I am CEO of Annette & Co, UK-based accounting firm. I'm a chartered accountant, certified profit first professional and financial strategist, and I help business owners take home more money from their business for them and their families to enjoy. So this session is all about UK business updates. That is what we are covering today. Good morning, Heather. Thank you for saying hello. Good morning, Evie. Hello, Rob. Hello, everyone who is tuning in and joining me on whichever platform you are on today. Do make sure you say hello. It would be lovely if you can say hello as well. Shout out for this Cozy Sundays podcast. Yes, I can absolutely give a shout out for the Cozy Sundays podcast, and I will check that out as well. So thanks for tuning in. Thank you for joining me. This, as I said, is all about UK business update. So that I have a number of things that I want to cover off today, a few notes to go through to make sure that I remember to cover everything. So hello, Vern. Thank you for tuning in. Thank you for the wave. Thank you for the tag. I appreciate it. I also, by the way, massively appreciate the love, the shares, the hearts, the likes, the follows, the subscribes, the thumbs up, all those incredible things in whichever platforms you are tuning in, whatever method exists there. I massively appreciate it. So thank you so much for that as well. So the first thing that I want to cover today is, of course, that the support scheme for self-employed people, the second round, has opened up this week. So the UK government has basically reopened the support scheme for millions of self-employed workers who have been disrupted by the pandemic. Sole traders are now able to claim up to £6,570 for lost income since July 14, after an earlier version of the scheme paid out £7.8 billion to 2.7 million people in May and June. And Rishi Sunak says that it means that the people's livelihoods across the country will remain protected as we continue our economic recovery, helping them get back on their feet as we return to normal. Of course, there has been a lot of criticism around this as well. Many people saying it doesn't go far enough. Many people being left out of support schemes, both the self-employed scheme and other support schemes available when they run their own business. But as we have heard, this has helped 2.7 million people, so a huge number of people have been supported by this scheme and have the opportunity to be supported again if their business continues to be negatively affected by the pandemic. That is one of the criteria. That was, of course, the criteria in the first round as well. And it may be that you didn't meet it in the first round because you weren't adversely affected to start with, but now you are, or vice versa, in which case you may only be able to apply for one, or if you've continued to be adversely affected, you are, of course, able to apply for this second round as well. This time round, instead of 80% of net profits, what is being paid out is 70% of net profits up to that maximum. So there is a reduction this time around as to what people will receive, but that is open. So if you are self-employed, and by self-employed, the definition in the law is that you are a sole trader or you're running a partnership. This is not applicable if you're a director of a limited company. Technically, under tax and company law, if you're a director of a limited company, you are not self-employed. This is for those people that are self-employed. They are a sole trader or a director of a limited company. So the second round of grants is now open for applications for people who are affected there. Tim, good morning. Wonderful to see you as always. Thank you again for hopping it on. It is always lovely to see you. Sarah, thank you for joining me as well. I do very much appreciate it. So energy suppliers fear that rising bad debts are occurring and will continue to do so as the furlough scheme comes to an end. Centrica and Bulb are two companies that are expressing concern that the consumers will struggle to pay their bills. The withdrawal of furlough will come at a very difficult time of year for the energy sector anyway, when even in normal times there can be problems with smaller suppliers struggling to meet autumn deadlines, to pay, and development for renewable energy and those kinds of things as well. So this is going to push some smaller suppliers out of business. Some 20 energy suppliers have gone bust since November 2016 in a sector that suffers from very thin margins and fierce competition, and is worried that this is going to put further strain on the sector as well. The UK government and utilities promised at the start of not to disconnect any households who were in financial distress as a result of the pandemic. But of course, the question for many energy suppliers is, how long can that continue? How much debt can they actually build up on their books, and how can they actually manage that? Is there a point where they have to say, actually, we do need to be shutting these people off, because the people are never going to manage to then start repaying their debt in any serious way, and the company themselves will run out of cash. There will be a cash issue there as well. So energy suppliers are, having some serious issues there and serious worries about the situation, particularly, like I say, as furlough is starting to be tailed off, as we are hearing of more and more companies announcing unemployment, announcing redundancies, which I'll speak about shortly later as well. So thank you everyone who is tuning in. Thank you for joining me. I massively appreciate it. This is AMs with Annette, and on Tuesdays, AMs with Annette covers your UK business update. So this is me speaking happened in the last 7 days, applicable UK business specifically. So thank you for the follows, the likes, the shares, the love, the hearts, the subscribes, the thumbs up, all those incredible things. I thank you very, very much for those as well. If you have any questions on what I'm covering off, please do make sure you ask them in the comments. I'm happy to answer those. And if you do watch the replay and have questions, again, I will come back and check those out. So you can still ask any questions that you may have in the replay as well if you are tuning in on the replay. And if you are watching on the replay, give me a hashtag replay in the comments. If you're tuning in live, of course, do make sure you say hello as you are watching. It is always lovely to have people say hello to me in the comments. So I would massively appreciate if you want to do that as well. Now, the UK remains attractive to investors despite, said Tata boss. Turmoil, the new company behind the UK will remain an attractive investment destination. Trade turmoil has become the new normal for companies, according to the head of India's Tata, one of Britain's largest private sector employees. Britain had not unduly hurt the UK's standings, said Tata Sons chairman, though it had warned that any new tariffs would damage the Indian conglomerates as well. The Tata boss says, I think what you look for in running a big business is stability. It's that every policy you end liking. In the last 3 to 4 years, Brexit dealings have had a lot of twists and turns, but the world has not been a stable place for the last 4 years. Geopolitical conflicts have become a new normal for every business. These comments, of course, come as the UK resumes resuming trade talks with the EU in the hope of striking a deal before the 12-month transition period comes to an end on the 31st of December. In the past, I've spoken a lot about what happens at that point in time, about increased tariffs, about those kinds of things to consider in terms of being consumer running businesses as well. Our cost of sales will potentially increase both as a business as a consumer as well, in terms of increased tariffs and what that might look like. We may also see an increase in unemployment as a result of Brexit as well. We've heard about companies saying that if certain tariffs are in place, they could not operate in the UK. They may have to move abroad, and that will also impact at the same time as well. So thank you everyone who's tuning in. Thank you for your questions, your comments, and all those lovely things that happen in the comments, whichever platform you are on. I massively appreciate it. Robbie is saying, so if you got the first one, you're guaranteed. Robbie, this is in terms of the self-employment grant. You have to declare, like you did the first time around, that your business has been negatively affected and continues to be negatively affected by the pandemic. If that is the case, if you were entitled to the first, then you are absolutely in, and you continue with that caveat, then yes, you are entitled to claim the second grant as well, Robbie. Ben, hello, thank you for tuning in. Erin, hello for joining me. Edward, Alexander, I appreciate that. See what we've got on here. Thank you, Sky, I appreciate it very much. Lovely, lovely, lovely. Great. What else have we got? There we go. We are covering UK business updates today. This is AMs with Annette at 11 a.m. Mondays to Thursdays. As always, Tuesday's topic is UK business updates. That is what we are covering off today. If you have just hopped on just now, if you have hopped on and you're halfway through and you want to go back and watch from the start, you'll be able to do so on my YouTube channel once this ends. You can head to AnnetteFergs.tv and find that really easily there, the YouTube channel. Make sure you do subscribe whilst you're over there at the same time. UK commercial leases have shortened as crisis hit tenants are winning concessions. The pandemic appears to be shifting the balance of power from the landlords. Figures are showing at the moment. So commercial leases in the UK are becoming shorter and more flexible as property owners are forced to make concessions to hard-hit tenants. The average length of a lease for commercial tenants, which includes retailers and companies' office space, has tumbled by 10 months between February and June to 27 months in total. So that's a drop of a 10-month average lease, which is really quite significant in reality. That is quite a drop in the data there. That's according to Property Data Group Released, are saying that the reduction offers greater leeway for tenants, many of whom of course have been hit by the economic fallout from the pandemic as well. But for property groups, shorter leases mean less certainty over future income streams, and their investors are not going to necessarily be happy about that. Caleb Dunn, commercial analyst at Release, says that shorter leases present a risk to landlords due to the uncertainty of future occupancy and cash flow. Of course, we know that. But of course, longer leases pose a problem to the tenant as well. So this is trying to get a balance between those two situations at the same time. Alfie, hello, thank you for joining me and thank you for tuning in. Oh, I've got an itchy nose. This is your UK business update. This happens Tuesdays at 11 a.m. where I speak about all things in relation to. Thank you everyone who is tuning in and joining me today. Now, M&S, Marks and Spencer's are to axe 7,000 jobs over the next 3 months in a complete overhaul. Basically, as a result of the disruption to the high street and as a result of coronavirus. They have a 78,000 strong workforce, but of course they had severe impacts from this situation as well. So they are looking to cut the numbers of staff that manage and support stores as they scramble to adjust store costs and rely on much lower sales as well. Many companies we are hearing are delaying investing in worker pension contributions, a spike in employers missing pension payment deadlines during the pandemic is going to impact savers, and it may mean missing retirement returns as well. So thousands of UK employers have not invested their employees' pension payments during the coronavirus crisis, a sign of pressure that the pandemic has placed on many businesses, of course. A Financial Times survey of pension companies uncovered a spike in employers missing payment deadlines. When pension contributions are not paid, then the saver, of course, can miss out on potential investment returns that are tax-free and boost their retirement pot as well. So big problem here if this continues. Big problem anyway, quite frankly, but if it continues, they've got a problem. Of course, contributions need to be handed to pension companies by the 22nd of the month after they're deducted from checks, but what appears to be happening is the documents are being delayed, which means that the companies are holding on to the cash at the moment. So that is a big problem as well. The Pension Ombudsman and Industry Watchdog says it is now prepared for a jump in complaints from workers about missed contributions as well. Thank you everyone who's tuning me. Thank you for joining in. If you do not enjoy this live stream, of course, you are welcome to hop off official BG Media IO. You are more than welcome to not listen if you do not enjoy what I am sharing today. Same with you, Joe. You are more than happy to leave this stream if you do not enjoy what I share. Then please do. There is no point in sitting on somebody's live stream and wasting your time and making comments that are not constructive to anybody. So please feel free to move on if you do not enjoy this stream. However, I do thank everyone who is watching and listening, who is giving me thumbs up, likes, loves, hearts, shares, follows, all those good things, whichever platform you are on. I do appreciate it. So I think we're just going to block this person too, because they're being a pain, quite frankly, in my stream. So I'm just going to do that now, and it's all going to be lovely. There we go. Beautiful. Lovely. It's the joy of social, being able to block people who are trolling you. It is lovely. So city centres need government support to recover. We are hearing that city centre bosses are saying that they need government support to recover. Of course, cities footfall both through fear, through lockdown, through changing of shopping habits and changing of working habits as well. But the question is this now, and this is an overused phrase massively at the moment, but is this now the new normal? Have shopping habits changed? Full stop. Have working habits changed? Full stop. Or is this a short-term thing? And of course, the government cannot keep supporting businesses indefinitely if this is actually how we are moving as a country in terms of our retail habits, our shopping habits, and our working habits. Now, if this is a short-term thing and it's likely to rebound back, yes, then of course some support can be available, and of course some transitional support may be available as habits are changing. But of course, I also believe that in part it is up to those city centre businesses to also do what they can do in order to maximize their own businesses as well. I think that's a big part of actually running a business, is taking responsibility for that as well. Estate agents are fearing that we will have a boom followed by a bust. Of course, at the moment, the housing market is going insane. Houses are coming on and disappearing incredibly quickly. But there was a survey by the Royal Institute of Chartered Surveyors where the results came out to suggest that after this kind of boom, there will be a massive bust in the housing market, a drop in house prices, and a slump in purchases. So time will tell on that as to what happens, but that's a worry as well. And of course, last but not least, we heard this week too that we are officially in recession. Like, we needed to be told that. It was pretty obvious to everybody that that was the case, but of course the data just confirmed it. We knew already that Q1 of the year was the first quarter that looked like it was going to lead us into a recessionary period, but because we only had lockdown for about a week in Q1, it was going to be pretty obvious that Q2 was going to also show a contraction, and therefore we have, of course, seen that we are now officially in recession in the UK. No surprise to anyone. That should not come as any surprise whatsoever, because it was all pointing that direction. Absolutely. The question, of course, will be how long will we be in this recession for? And various economists' views differ on that. My belief is that we will be in this recession for a while, because not only have we got the recovery from this pandemic, but we have Brexit coming up, which was in itself predicting a decrease in GDP on its own, let alone coupled with the pandemic situation that we've been in as well. So oh, there we go. We've got an issue syncing. There we go. We're back on Instagram. Sorry about that, Instagram. You froze for a moment there. So that is the problem that we have, is that we just don't know how long this recessionary period will last, but we are officially in recession. My belief is that this recession will be at least a couple of years. I don't think that we'll be in a V-shaped recovery. I don't think we'll have an incredibly quick bounce back, but of course I would love to be proved wrong in that as well. So thank you, Michael. I appreciate your kind words. Thank you so much for that as well. So that is what I have to share with you today. I hope that you have found today's AMs with Annette valuable. Of course, every Tuesday is your UK business update. Now, if you're not already in the Uncover Wealth community, I invite you to join me there if you are a business owner. I would love to have you there. Today we have our Training Tuesday session, which happens every single Tuesday, and today's session is 10 great ways to increase profits. That is what I will be sharing inside the Uncover Wealth community today on Facebook. So do make sure you hop over there, answer the join questions, hit join and join me. It is my private Facebook group. You can just find it by typing Uncover Wealth Community into the search bar on Facebook and finding it that way. And I would love to see you in there as well. So thank you everyone for joining me. Thank you for tuning in. I know your time is incredibly precious, and I thank you for spending some of it with me. Take care everyone, and have a wonderful, wonderful rest.